Welcome back to Borak Bersama Maybank. We are done with yet another round of earnings season, and the good news is our analysts are continuing to see an uptrend in quarterly core earnings for the companies under our research universe. In today's episode, we've once again invited our head of equities research, Ms. Wong Chew Han, to give us a rundown on our latest fourth quarter 2024 results Roundup report. Welcome back to the show, Chew Han.
Thanks, Ben.
Okay, as usual, let's do a quick recap on the earnings performance first. In one of the subheaders in your report, it's mentioned that the fourth quarter core earnings net profit for the stocks under our coverage is up 11% year on year. The question is now, what has this contributed to in terms of earnings for the full year, and what are the key findings that led to this growth?
Okay, hi. So during this quarterly results for fourth quarter calendar year 24, earnings were pretty positive, and this is actually the seventh sequential quarter of year-on-year earnings uptrend for the stocks under our research coverage. Overall, because of this 11% year-on-year uptake for the fourth quarter, we are now seeing a 12-month growth of 13.5% for the full year 2024. The strong year-on-year growth was helped by sizable reversals of receivables impairment at Tenaga, as well as a tax credit at Telecom Malaysia. Now, as for highlights, we found that most sectors deliver earnings growth in 2024, with the exception of petrochem, gaming, shipping and port, consumer. In the gaming space, we are referring to Genting Berhad as well as Genting Malaysia. All right. Whereas in shipping and port, we're referring to MISC and Westport. Also, what we saw was that the gloves earnings returned to the black, while aviation stocks, they remain in losses, but at a smaller, lower level of losses.
All right, Chew Han, you mentioned earlier that most of the sectors have seen positive growth during the quarter. Let's expand on this a little bit and look at the performance of stocks on a more granular level. What's the core earnings misses to beats look like? And has the team upgraded or downgraded any stocks because of it?
Well, the ratio of core earnings misses to beats against our forecast remained at above 1 times. It was actually at 1.3 times, with 46% of our coverage results being in line, 31% falling short, and 23% above our expectations. Gaming, gloves, technology, telco disappointed in earnings, and there were no sectors that positively surprised. We do note on some positive outliers in terms of stocks, like Tenaga, due to 816 million reversal of receivables impairment, and Telecom Malaysia because of its 470 million tax credit. For our stock ratings, let's start with the positives first. We have upgraded 4 stocks to buy, and they include MISC, RHB, Sunway Wheat, and UEM Sunrise. But on the other hand, we have unfortunately downgraded quite a few stocks. Electronics and 7-Eleven, we have downgraded to sell, while Alliance Bank, Celcom DG, Genting Berhad, Genting Malaysia, Hatta Lega, Mr. DIY, and Nestle Malaysia, we have downgraded to hold.
All right, now that the recap is done, let's take a look at our forward estimations. Trade tariffs from the US and retaliatory tariffs from their trade partners has caused quite a stir in the market during the first quarter of 2025. Has this development in geopolitics coupled with the fourth quarter earnings moved our core profit and KLCI estimates for financial year 2025?
Yes, they have. We are now estimating a 6.5% core net profit growth for our universe this year, 2025. This is lower compared to our mid-December 24 estimate of 10.7% growth for this year. As for our KLCI target for this year, we need to take a look at our KLCI earnings estimates for financial year 26 first, because our end year KLCI target for this year is based on a 12 months forward basis. So for 2026, similar to 2025 estimates, we have lowered our core net profit growth estimates. Hence, our year-end 2025 KLCI target now sits at 1,700. And this is based on unchanged price to earnings ratio of 15 times. Do note that prior to this, we were looking at 1,740 as KLCI target for end of this year.
All right, thanks, Chew Hann. Lastly, any changes to our top buys list for the quarter?
Well, we have retained most of our top buys, but have refreshed a few stocks, all right? So right now our top buys are Public Bank, YTL Power, Gamuda, AMMB, and KPJ. These are the big caps. Whereas in the small mid cap segments, our top buys are Frontcan, IT Max, Aeon, Aurelius Tech, as well as SolarBest.
All right, thanks so much, Chew Han. So to recap a little bit, our KLCI base target for 2025 is now at 1,700 points. And our top three picks for the large caps are Public Bank, YTL Power, Gamuda. All right, so that's all the time we have for today. If you want more details on our fourth quarter 2025 results roundup, you can catch Chew Han's report on the Discover tab in your Maybank Trade MY app. But if you are new to the markets and have an interest in trading stocks, structured warrants, or even futures, you can approach our sales representatives at your nearest Maybank branch, and they will be more than happy to get you started on the journey. With that, we'll catch everyone in the next episode, but until then, this is Ben signing off.